stream in as well. We're going to be covering a very important live stream this evening around possibly the most financially destructive product by statistics in the marketplace right now, and how credit cards are destroying so many of us. But on the flip side, those of us that understand the game, it start to slowly make many of us, or at least some of us, rich. We're going to be covering the basis of what credit cards are, how they work. We're going to be covering the debt levels with credit cards on the consumer level. And then we're going to start getting into who uses debt credit cards, how they use them, and the discernment between those who are failing miserably with credit cards and those who are actually using them as a platform and a foundation to build real wealth. So this live stream is going to be extremely informative, extremely powerful. For those of you who have the attention span to stick around, I promise you will get quality value out of this live stream. So we're going to start with some basic questions that a lot of people have about credit cards. We're not going to get into the weeds on each one of these because honestly, it's like the ones and twos, but we're going to cover enough of it to give a baseline before we start to get into some important statistics and some very important facts that help us discern how to be successful with credit cards in our overall financial journey. So some of the most common questions are the obvious. How do credit cards work? What is a credit score and why is it important? How can you build or improve your credit score using credit cards? What is the APR? How does credit card interest work? What are credit card fees and how can you avoid them? How to choose the right card for yourself? Secure versus unsecured cards. So there's a lot of, basic but important level questions that many people are out there asking. Again, these are the most frequently asked questions about credit cards. Getting past that having been said, that lack of fundamental understanding has led to a national debt as of the first quarter of 2025 of $1.182 trillion in credit card debt. That is an exceptional amount of money. This data is being provided by the Federal Reserve Bank of New York. So tremendous amount of damage being done financially by credit cards or the mismanagement and poor use of credit cards. So to get into some additional credit card statistics, some key stats. The average household debt, the average American household owes $10,767 in credit card debt as of the first quarter of 2025. 631 million credit card accounts in the United States. That is a ton. The average APR for all credit card accounts is 21.16 in quarter two of 2025. Average APR for accounts with finance charges is 22.25. So some other interesting stats. Consistent growth. Credit card usage has shown a steady increase over the past few years with 9.38% rise from 2023 to 2024. Economic influence, households with an annual income exceeding 100,000. Credit card use credit cards 2.1 more times than households below 25,000 a year. We're going to get back to that shortly because that's an important statistics. Ethnicity gap. When comparing ownership of credit cards, individuals of Asian heritage are 29% more likely to possess one than individuals of black heritage, with 89% of Asians having a credit card. That's insane. I'm gonna read that again. Individuals of Asian heritage are 21% more likely to possess one than individuals of black heritage, with 89% of Asians having at least one credit card. Educational background, people with bachelor degrees or higher are 85% more likely to own a credit card than those with less than a high school degree. Interesting. So what's the next one we want to go over? Credit card, we want to do the percentage of credit card holders by race. So Asians lead the way with somewhere between 89 and 93%. White non-Hispanics, 88%. Hispanics, 77%. Black non-Hispanics, 72%. Keep up with these statistics for a second. Credit card ownership and usage trends by income level. Ownership. Higher income individuals are more likely to own credit cards. Approximately 97% of households with incomes of 100,000 or more have credit cards, compared to just 46% of households earning less than $25,000 a year. Interesting statistic. Usage frequency. Higher income households rely on credit cards more frequently for payments. Households earning over 100,000 use credit cards for about 89% of their payments, while those with lower incomes use it less than often. So reasons for use: wealthy individuals often use credit cards for rewards, travel perks, conveniences, and take advantage of benefits like travel miles, cash back, and purchase protections. They are also more likely to open credit cards more frequently to maximize rewards. Low-income individuals are more likely to rely on credit cards to cover basic expenses and emergencies, potentially leading to carrying balances and accumulating debt. Stick to that for a second. In essence, while both wealthy and low-income individuals use credit cards, their motivations and financial consequences of their usage differ significantly. Wealthy individuals leverage credit cards for benefits and conveniences, while lower-income individuals may be more dependent on them for essential expenses, potentially leading to greater struggles with debt. Interesting. So the next one I looked up is, who uses credit cards based on credit scores? Do people with higher credit scores use credit cards more, less than those with poor credit scores? So individuals with high credit scores tend to use credit cards more frequently, but they manage their credit utilization responsibly. While they may have more credit cards and utilize them for various purchases, they consistently maintain low credit utilization ratios, demonstrating careful spending habits and on-time payments. According to Experian, people with exceptional credit scores often keep their credit utilization below 10%. Interesting. So high credit scores and high credit usage. Individuals with high credit scores often have multiple credit cards and use them for various purchases. This is because having more credit cards can increase their overall credit limit, which when used responsibly can positively impact their credit. Stick to that for a second. The importance of credit utilization: lower credit utilization is key. Positive impact on responsible usage. So maintaining good credit. So clearly people with higher incomes, higher educations, and higher credit scores use credit cards more frequently, but they use them differently. Very important. What's the next one? What are the benefits of credit cards? Let's just get to some basic perks and benefits of credit cards for those of you who may not be as familiar. For those of you who are veterans, stick through this video. It's going to get much better as far as in depth on how to use credit cards for expanding your wealth and building wealth. So those of you who are veterans, just stick around for a second. So some detailed benefits of credit cards: building and improving credit, earning rewards, convenience. Credit cards offer a convenient way to make purchases both online and in person without needing to carry large amounts of cash. Purchase protections, travel benefits, fraud protection, debt consolidation, emergency funds. Shot a video about that a couple times. I had some interesting criticism when I proposed the idea of credit cards being smart emergency fund tools if you have the intellectual capacity and the right strategic behavior to use them in that capacity. Spending, tracking spending, so a great budgeting tool. Accessibility: credit cards are widely accepted, making them convenient payment methods for a variety of purchases. Cool. Why credit cards are better than debit cards. Some of you out there, either yourself or you know individuals who are diehard about their debit cards and have in their mind no basis to use a credit card or take the risk with credit cards because they have their debit card. What's the point? Let's see what the internet has to say. Here's why credit cards can be better: building a credit history and score, enhancing fraud protection. Credit cards are typically often offer stronger fraud protection compared to debit cards. Under the Fair Credit Billing Act, your liability for unauthorized credit card charges is generally limited to $50, and many card issuers offer zero liability policies, basically meaning that any unauthorized transactions on your credit card, they're going to likely back you up and reimburse. If a debit card is compromised, the funds are directly withdrawn from your bank account, potentially impacting your finances, and may take longer to recover the funds with no guarantee, by the way. Rewards and benefits: strong short-term financing, other perks. Credit cards may come with additional benefits like car rental insurance, extended warranties on purchase protections, and travel insurances. So another one: ways credit cards help you build credit. We'll skim over the top of this really quickly. Here's how credit cards facilitate credit building: establishing a payment history, demonstrating responsible credit utilization, building a longer credit history, Diversifying your credit mix, having different types of credit accounts like credit cards, revolving credit, and installment loans like student loans and mortgages can also benefit your score by showcasing your ability to manage various forms of debt. Strategies for effective credit building with credit cards. Let's see. Starting with the right card. Important. Make on-time payments. Common sense, but important. Maintain low credit utilization. Use your credit card regularly. Use your credit card regularly. Keep credit accounts open. Don't close them if you don't have to. Limit new applications, so apply in moderation. Monitor your credit reports and scores. Cannot manage what you can't, what is not measured. Consider becoming an authorized user. This still works. This still works. We're going to get into these benefits in more depth when I start talking of transitioning over to how credit cards part over to helping you develop and build wealth or lay the foundation. Important considerations. Do not overspend. Avoid carrying a balance. So these are some of the bullet points that highlights to go over to lay the foundation. Credit cards are primarily, most effectively, spending tools. But I'm going to let you know right now, many people unfortunately use them as debt tools. What I broke down of those of higher education, higher economic background, income, higher FICO scores, use them as spending tools typically. Those of us that are more a bit risk takers and still strategically aligned, as I'm going to get into a little bit in depth in a moment, we'll use them as debt tools effectively and strategically to grow our net worth, to build up the roots that get us access to capital to grow our net worth. Now we're going to transition for a minute. I'm going to make the proposal for you that credit cards are the single best financial tool available in the financial space. Literally the single best financial tool in the financial space. And that's against checking accounts, savings accounts. That's against life insurance. That's against mortgage loans. Any other financial product that you can think of that's mainstream and widely adopted and used, credit cards are the single best tool available. And I'm going to give you somewhere around 8 to 9 bullet points as to why. So now we're transitioning into why credit cards are actually going to be a phenomenal wealth building tool, not themselves per se making you a ton of money, but laying down the foundation that will get you access to the resources, help you make connections and build relationships with lenders and institutions and even individuals that will lead to you building wealth if you're strategic and consistent. So there are better ways to make purchases. They are safer. As alluded to, when a general Google search around this, there's purchase protection, and fraud protection on credit cards that is not available generally on debit cards, with exceptions. What that basically means is if you experience fraud, because it is on your credit card, you are likely going to get the money reimbursed because it's not your money in the first place, and you're going to get hassle-free replacement of a card and move on with your life. If you go through it with the debit card or link to your checking account and you experience fraud, you have to potentially fight with your bank and possibly even do your own due diligence on the source of the fraud, potentially, to try to make an effort to get your money back. And depending on the sophistication of the fraud and the depth of the fraud, you may not get your money back. So, purchase protections. You can end up with a scenario where if something is stolen, broken, damaged, where your credit card will cover that purchase for you potentially. That is not available on the vast majority of debit card options. Something to keep in mind. So the very base premise of credit cards are spending tools. Credit cards already have a feather in their cap because they're safer and more effective to use. Budget enhancement tool is number 2. Cash flow management. Credit cards are phenomenal cash flow management / budgeting tools. What they do is, as they alluded to again in here, help you track your spending. They can help you itemize your spending. How? Because credit cards entice you to usually spend in certain categories. So certain cards will be better for gas, groceries, retail shopping, travel, business expenses. All of this, if you're smart and lean into those things, allows you to use those cards in those specific categories, which allows you to budget and track how much you're spending in given categories. And it also allows you to effectively itemize, and that even goes all the way out to tax filing. when you might be a 1099 worker or a business owner, credit cards will allow you to itemize so much more effectively than doing a debit card or all your purchases out of your checking account, all convoluted and mangled together. So that's number two. Credit cards are phenomenal budget and cash flow tools. Hi, whoever this is saying, say hi. Wayne, that's you, my guy. What's going on, Wayne? So, credit builder, obvious one, but one that people take for granted. And this is where the wealth generation point really starts to take off. Credit cards are phenomenal and extremely common credit building tools. And what's phenomenal about credit cards over any other way for you to build credit is all you have to do is spend money that you generally already have to do so. If you're using credit cards effectively, all you're doing is making the basic purchases you already make in your life. Gas, groceries, insurance, utilities, the basic stuff you can't avoid, putting it on your credit card and paying it off as soon as you use it or at the end of the month or before your statement cycle cuts or your billing date. That's all you're doing. And you're building the most powerful credibility tool in the financial space, which is your personal credit. Your personal credit will control the cost of your access to capital, cost of insurances, and it's a part of your employment and background checks. The list goes on. Your credit is used for a ton of stuff. Access to banking relationships in the first place. Your credit is used for a ton of stuff. And those of you who are focused on really building wealth know that 9 out of 10 times your credit will be the baseline and accessing capital and the cost of that capital. Those two things alone will separate and make the difference in those who build wealth and those who, whatever the hell they're doing, drowning in the background financially. Credit cards are phenomenal credit building tools because they will allow you to literally build your financial reputation, which can literally open the door to unlimited amounts of access to resources, all from you making your basic spending on your cards, spending money you already have if you're responsible. You have to do nothing extra to build credit with credit cards. Put purchases on them every single month and pay them off shortly after those purchases or at least before the billing cycle comes or the statement date cuts. Simple. So that part alone in itself is a mic drop and walk out of the building, a walk off stage scenario. But we got more. There's actually about 5 or 6 more. Relationship builder with banks. This is arguably besides credit building, my favorite feature of credit cards, because financial institutions profit so handsomely off credit cards and they're still so strategically useful for their consumers and their clients. So this is like the merging point where you're making the bank money and you yourself are making money at the same time. There's almost no other financial tool that does that for you without you having to think about it if you're smart. Like literally relationship building tool with banks. You're building your credit, but you're also you're managing a resource that you're managing your spending and you're using the bank's money in the process. So all you're doing is letting the bank front you the money that you already should have in your checking account, making basic purchases. And if you're a business owner, making your business expenses through it, paying it off out of your account. The bank is making money. The business that you made the purchase with has more access to people to buy their products and services. So they're coming out good, even though they're paying a fee to the merchant, the processor on the back end, the credit card company, etc. But they're still coming out better because if you didn't have that ease of accessibility and use to make purchases, you wouldn't spend as much money. So the business owner or whoever the business entity is coming out good. And if you're smart, you're getting credit building, you're getting cash back, you're getting travel rewards, purchase protections, etc. And you're building a strong relationship with that financial institution. Credit cards are literally the first handshake on a real scale with you and a bank. Like once you start using credit cards on a consumer or the small business side, at this point in time, what ends up happening is you are now beyond the basic level of checking and savings account, basic inflows and outflows of your spending. You're starting to manage someone else's resources, the banks, and you're growing your pot at the same time. Banks will start to treat you totally differently and offer you so much once you responsibly start managing your your deposit accounts, and then you stack on top of that, managing your credit card accounts. And the beauty of this with relationship building with banks is, as I've shot in a recent video, it scales. It scales. How? Because all that gets reported to your credit report and other data furnishers, and other banks can see it. So you do a great job with Capital One, and Capital One's gonna put the information out there. Wells Fargo's gonna be like, that's great. That client's doing fantastic. Let's offer them some of our products and cards and see if we can't earn their business. Wells Fargo starts competing. Bank of America looks over the shoulder and is like, damn, they're managing all those expenses. They're paying everything on time. They're managing multiple accounts. Here, I got something to match that. Let's see if we can do it. Chase is in the background. This credit union is in the background. Next thing you know, you have dozens of banks flooding you online, mailers, and all kind of specific tailored offers to establish a banking relationship with them. And those of you who don't understand the gravity of how powerful that is, banks are literally the foundation of this channel, and I will say it every time. I will continue to say it. It's to get you to understand, for those of you who are serious about building wealth, that your banking relationships are where it really happens at. It's the foundation of where it really happens, because that is where you start to manage your own money and resources, and the real legitimate foundation to getting access to others, OPM, other people's money and resources. That opens the door to all other wealth creation mechanisms in our economy. So when other banks see you are managing the banking relationships and the not only the deposit accounts, but the credit cards, that is when you start to kick the door down. Now they're offering you credit products. They're offering you other lending tools. They're offering you mortgages, auto loans. The sky becomes the limit. They're competing to give you better credit card products with better rewards and perks, and they're competing to give you higher limits. If they are like, look, such and such bank has trusted you with 5,000, you've managed it responsibly, I'm going to at least match or potentially exceed that once you establish a good relationship with me. The next bank's going to do the same thing. And then when you go back around and get the limits increased, they do the same thing. What this leads to, for those of you who are already familiar with the relationship between personal and business credit, those of you who are serious about building wealth in real estate, building wealth through business ownership, this kicks the door down for you to get access to capital, business funding, business credit. How? Because until you're some multi-million-dollar, decade-plus conglomerate business, your personal credit is the foundation to your business credit and your business fundability. Your personal credit and personal finances are the baseline. So when you start to have high-level personal credit cards from multiple credible financial institutions, the second you go for that business credit card, watch how this starts to work for you. They're not only going to approve you, but they're going to start to compete and match with the limits you have on the personal side. When you use those business cards responsibly, watch how they catapult you to 3, 5, 7, 8x the limits that you're used to seeing on the consumer side. Why? Because businesses tend to spend way more money, and they want you to. Why? Because they make money when you spend money. So if I'm getting an interchange fee of 2, 3, or 4%, and I can get that on either $3,000 on a consumer spending side a month, or I can get it on $13,000 on a business credit card and expenses for a credible, reputable business, 6-figure business, what do you think they want to put their money and concentrate their efforts? So they're dying to give you high credit limits once you cross the threshold on the personal side. You have to show that you manage what you have personally already. Once you're a good steward, that door kicks open for business credit. And that kicks the door open for you, if you're smart, to get your door to capitalize a business, legitimize yourself, get the documentation in order, get your revenues going, et cetera, et cetera, et cetera, so you can get access to real funding products like lines of credit, loans, SBA funding, real estate financing, et cetera. It scales. So that's just the relationship banking part, as y'all can see I can run off on. The next one, rewards, perks, elite status, protections, travel enhancer, social. I put on there as well, social mobility. And it helps you get in proximity to high influence, high net worth individuals. So this is another one I got to dive into just with a little bit of depth. Credit cards are a single financial tool that is accessible to the everyday person that can be scaled up in a matter of months. And you can go from getting a secure credit card or a base level, entry level unsecured credit card, and within 9 months, 15 months, 2 years, you can get access to top level metal, high elite status credit cards that will get you first class flight tickets, exclusive lounge access, exclusive access to hotels and resorts where other extremely successful people are. I have no way of communicating to you how powerful this is. I've experienced this firsthand. I'm not the kind of person that is big on breaking their neck to fly first class. Prior to getting into the credit card space heavy, I wasn't even big about what hotel I stayed in until I started to understand the nature of this game and actually explore it. You have no idea how being in proximity with the right people at the right time can open so many doors for you. And it's something as simple as a credit card that you used effectively, got a great welcome bonus on, that has these back-end benefits that got you into a great travel lounge and turn around and got you first class, afforded you the ability to fly first class when you maybe normally couldn't afford it, and get high-ranking status at a hotel chain that got you in a high-level resort that might put you in a lounge, a first-class flight, and or in a hotel space with high elite, high influence, high net worth individuals. You have no idea how powerful that can be. You can bump into somebody or have a small talk at a lounge while you're waiting on a flight. You can sit down with somebody in the front of the plane while you're flying to your destination, and or you can end up staying at a high-end hotel you might not normally have touched because of the credit card you have, making it more feasible for you, and end up next to somebody worth upper 6, 7, 8, 9. You put a number on it, figures in net worth or equivalent levels of influence or affluence. Individuals who may normally never share a space with you, your kids will never go to the same schools. You never normally live in the same neighborhoods. You're not going to go to the same churches. You're not going to go to the same grocery stores half the time, etc. But credit cards, when used effectively, can turn around and put you in the same proximity, a seat next to a multimillionaire, a multi-centimillionaire, can put you in a hotel room, at a bar, at a restaurant you normally wouldn't be at. It can put you in a lounge that you normally wouldn't even know is in the damn airport, next to somebody of high influential status, all because you spent your money effectively, budgeted effectively, and scaled up the quality of cards you used. You have no idea. If that doesn't ring a bell for you or turn something on for you, a light on for you, on the possibilities from a single product that is available to damn near anybody that can manage money even kind of okay, in a matter of 9, 15, 2 years, 24 months, like in a matter of a handful of months to a couple years, you can go from a secure credit card to an Amex Platinum, a Chase Sapphire Reserve, a Hilton Aspire, and end up flying next to, in a lounge, sipping a beverage next to, or sharing a hotel space with some of the most affluent people in your community or in different communities, in different cities, different states, different parts of the globe. If that doesn't do something for you and turn a light bulb on for you, I don't know what to tell you. Business funding segue. I already touched on this. Using personal credit cards to qualify for business credit cards, which qualifies you then when used strategically and building your finances up effectively. This turns around and gets you access to loans and lines. If you don't believe that access to capital, effective, scaling up access to capital, strong banking relationship, lending relationships, private money, if you don't believe and understand how money works, if you don't believe in using leverage to build wealth, first off, you're sadly mistaken and poorly educated. I'm going to go out on a limb and say that. And I don't care how sophisticated the individual, high net worth individual is telling it to you, the entire world runs on credit. Literally 85, 90% of the money in circulation on the planet is debt. It's credit. If you want to go against the grain of that, be my guest. But for those of you who don't want to swim upstream, as I often refer to, basically swim up the goddamn Hoover Dam for that matter, and want to go up with the flow of things and use the scale of going with the current, then you have to access capital effectively to build up your net worth. You want to use capital to get access to financial resources and assets significantly faster than you ever could saving cash. You might make 5, 6, or 7 figures a year. That's great. Whatever you're making in cash, you can 5, 10, 20 exit if you use leverage effectively instead. PNR Connected LLC, my guys, good to have you in the building. Yes, sir. Nick, hello. Wayne, if you're still in the building, my guy. Listen, if you don't believe in using leverage to scale yourself up, and you're somebody who believes in being debt-free and, living off cash, living off your income, listen, that is a humble lifestyle. And if you want to get to a certain point where your house is paid off, you got X amount of money in your investments, you're living off of a reasonable salary, and that's good for you, shout out to you. Much respect to you. Kudos. But all of those in the building that's seriously trying to build legacy wealth, that's seriously trying to tap their maximum potential, add real value in this world, and make great money doing it and have a great lifestyle, make up for the things you might have been missing, and give your kids, your loved ones, lifestyles they never would have had access to normally, then you need scale at speed. Because instead of waiting until you're 55, 65, 75 plus to save your way to a reasonable financial position, you effective risk-taking, calculated risk-taking, understanding the concept of leverage, building relationships with banks, lenders, and individuals that will scale you up access to capital at great rates and terms that will turn around when you're smart and deploy them into assets, real estate, business. When you turn around and understand that using credit cards effectively, using personal credit cards, the basic ones that are at your bank, at your credit union, your community bank, online, that's constantly in your face, that you're throwing away the mailers for, just using those little basic tools, that little piece of plastic effectively for a long enough stint of time will scale you up into the best rates and terms, to the best quality leverage available in the financial system, allowing you to jump into real estate at scale and have something that is building income and equity for you, not your back muscle, not your time, but your strategic expertise, your strategy, and your ability to be a good manager and steward of money and put it into a productive asset and let the asset do the work for you. Or you want to put it into business because you want to uncap earning potential. You have a great idea. You have a great skill set. You have a great service. This is where the boys from the men get separated. Understanding how to take something that's basic, Prometheus, big things have small beginnings. Something as simple as basic credit cards. Again, starting from a secured or entry-level credit card and turning that over in the course of a handful of years and good strategy and consistency, turning that over into access to quality business funding, real estate funding, and jumping into businesses and assets like real estate that will start to do the work for you. And when you can access these things in a matter of months or a handful of years versus decades, the time value of that money changes. As I've said in many videos in the past, if we're both getting into our financial freedom journey, you trying to go all cash, I'm trying to go cash plus leverage. We both make $100,000 a year. We both save $20,000 towards our first real estate property. But I'm going to use that $20,000 and my $100,000 in income and my credit to also mix that $20,000 with $100,000 in excess capital. You're going to stick to your $20,000. We both might buy our first rental property, but I'm going to have an additional $100,000 in capital that's going to allow me to buy 5 more rental properties. You're going to have to play that same game for whatever window of time it took you to save your $20,000. I'm going to have 6 rental properties in total over here between the $20,000 in cash and the additional $20,000 each out of the $100,000 I got in capital. You're going to have your $20,000. Now, mind you, you might be in a good financial shape in 10 or 15 years, but I'm going to run circles around you. I'm going to literally run circles around you because my real estate is going to be in my possession, gaining equity, giving me tax benefits, cash flow, and mortgage pay down way sooner than you're going to have yours. So the money that my real estate is producing for me is going to get in my pocket way before it can get devalued by inflation 5, 10, and 15 years later, like you're going to be waiting to do. The number one key to investing, the number one key to wealth building is time. If time is the number one key, then leverage is speed. That means leverage is going to be the number one key to maximize time, the time value of money. Insane wisdom just now. I hope those of you who are paying attention caught that. So personal credit cards scale you up to high quality real estate financing in your personal name, business and real estate funding in your business entity's name. Next, saving tool. Cashbacks, credit cards alone can be a saving and investing tool. I've shot a whole video around this that almost nobody tends to talk about. Travel credit cards get all the sexy hype, and I understand why. I just talked about the value of travel credit cards and what they can do for you. That's what's up. That having been said, when you use cashback cards, especially at scale, at the end of the day, this allows you to put hundreds to thousands of dollars a year in capital in your pocket from spending your own money on your basic purchases. On top of your income, on top of your savings, on top of what you might be putting in the 401k or IRA, I can take several hundreds to multiple thousands of dollars a year as a basic salary, everyday working person that I'm literally earning just from splitting the pie with the credit card company because I'm making purchases and they're making money and they want to entice me to keep spending so they can make money, so they give me a piece of the pie. My cashback cards can quickly turn into emergency savings fund, general overall savings, saving towards property if you want to use down payment money, investing, putting that $500,000, $1,500, $2,000 a year in extra cash back into stocks. I mean, y'all are doing birthday shopping and holiday presents all the time. If I get 4 credit cards in a year, that's 1 a quarter, that's 1 every 3 months. Nothing crazy, nothing insane. And each of them have a cashback bonus of $300 on top of the points I'm going to earn. That's $1,200 for me doing nothing but spending my basic money. If I do that for 10 years, that $1,200 scales out to what? $12,000? If that money is getting, let's call it an 8 to 10% return over the course of those 10 years compounding, can anybody see how that might turn into upper 5 to 6 figures on nothing but a few cashback credit cards on basic spend? Because $300 cashback reward means you probably only spend $250 or $500, a few $100s to earn that bonus. So you did nothing in theory if you're smart and strategic and understand how to restructure how you think. You turning something like cashback credit cards, that's not talking about maybe if you started doing 4 a year, you do 8 a year, and that 12 turns into $2,400 a year. Or if you scale it up and do business credit cards, where your cashback bonus is $500, $750 per card, and you do 3 or 4 of those a year, you're looking at what? $3,000, $4,000, $5,000 a month in cashback bonuses on spend that I'm already going to spend that I can turn around and put in the stock market or save towards real estate down payments or whatever else productive I can be doing. If you got kids and you want to put cash in their hands or put cash in their pockets, whatever you can constructively think you can be doing with this money. So just using cashback credit cards on the consumer or business side can fund an emergency fund, can stack up cash in your kids' accounts every year. If you do that for 10 years of your kid's life, just the cash alone, maybe you stuff it in CDs if you want to be extra conservative, 2, 3, 4% on CDs on $1,000, $1,500 in cash back on extra money every year. You might put $15,000, $20,000 in your kid's hand just doing nothing in the future. I don't know. Y'all let me know if this is making sense for y'all. Drop a like, drop a comment. Let me know if that's making sense for y'all. Next, pass down credit access to capital to loved ones, kids, and business partners. Literally, credit cards are the only single financial product that without you having to take the risk of actually going in debt to do or co-signing on anything, you can pass the financial reputation you've earned on your credit cards down to your loved ones, your kids, your legacy, or your business partners. Why am I even still here right now? Like, what are we even talking about? Basic credit cards, one of the most common financial tools in your bank or credit union. I can literally pass down the credibility I've built on those cards, the good payment history, the utilization, the credit limits that I kept stacking up. I can turn around in a click of a few buttons on my phone now and turn around and pass that to my children when they make 18. I can pass that to my spouse, my business partner, my close family members who I'm going into business with. If you're so fortunate to have people around you that are productive like that, that is an opportunity for a business partner arrangement. You might have somebody that's phenomenal at rehabbing houses that has terrible credit and wants to get into real estate. You don't know how to swing a hammer, but you got phenomenal credit and you want to get into real estate. Hey, you fix the property up and I'm going to help you get your credit together by authorizing you on my cards. We're going to both access capital, buy property together. I'm going to be the capital, the lead capital partner, and you're going to be the fixer-upper. I don't understand. I don't even get how we're almost $1.2 trillion in credit card debt. When people should be making those, that should be a wealth generation. It's wealth generation, but it's for these multi-gazillion dollar corporations, banks, institutions, and credit card processors. That should be money going in your pocket. That should be money going into your pocket. Do you understand what I just said just now? Basic credit card usage, even to this day with all the scams, fraud, and BS going on, banks are still allowing us to take the financial reputation on the credit cards we've developed and pass them on to qualified individuals, using it for giving them an opportunity to build an immediate credibility, financial credibility, turn around and get access to capital at great rates and terms without having to do the years of work that you did to get it. And if you're smart, turn around and leverage this for strategic business partnerships. Because how many people out here have skills or cash and don't have credit? And you don't have cash or skills but got credit. It's an exchange of value. It's an exchange of value. Are you kidding me right now? So I just laid out all these bullet points. The next thing I put that kind of ties into the last couple that I talked about leads to real estate and business ownership, the top 2 time-tested, proven ways to build wealth in America. Teamwork make the dream work. I'm trying to tell you, PNR, I don't know what else to tell them. That's how you have all these podcasts and videos about private funding and private money lenders and the awkwardness of going to them to try to fund your real estate deals. This is how you create strategic partnerships. Now, when you have a private lending situation or a real estate deal that you're trying to get into, this is how you come into it with some kind of value. This is what makes it hard to work private lending, because you're going out here with no value. You've never really did real estate. You don't have your own cash, obviously, because you're asking for mine. And you don't have credit, most likely, because you can't access the mainstream financial institutions' money to do real estate deals. So what value are you going to bring to a private lender? You don't have experience. You don't have anything of collateral or value. And you don't have a financial reputation or credibility or capital. You don't have anything to bring to the table to provide, to make those conversations palatable. So teamwork makes the dream work, PNR. Now, if I at least have great credit at scale, thick profile, phenomenal credit, dozen credit cards, business credit cards, I got access to capital. I got them from the best quality sources available, the mainstream lending system. Now, if I want to go out for the sake of flexibility and build private lending relationships, I have something to go into it with. Maybe I can blend capital with you, or I can at least show you my financial reputation. No, I haven't done the real estate part yet, but I can show you how I've managed and got access to this, that, and the third on my credit. I got the credit report or the scores or however you want to structure that. You build a LLC together and access capital that way. However you want to blend this up, but now you're coming to the table with something valuable and with credibility that will allow you the ability to save face and go in with a position of strength to those who you're looking to partner with. So this is how this bridges off into the access to the 2 most time-tested, proven ways to build real wealth, not crypto, not NFTs, not Forex trading. And shout out to anybody dabbling in any of those things. But I'm talking about the real bread and butter stuff that honestly, real wealth in the world is still deploying all of its resources into, with the exception of stocks. We'll go into the bucket of those other 3. But business ownership and real estate are older than the stock market. Those ways of building wealth are older than the stock market. And in a capitalistic society in America that we're in, most of us, you can do the real estate and business ownership game at scale with what I just laid out for you, starting with a secured credit card, a baseline credit card. So those of you who are experiencing credit card debt, or you know individuals that are experiencing credit card debt, I implore you to share this video, because it's about a mindset shift. It's not just about the tool itself. As I've said in many occasions, as other sarcastic people have said, spoons don't make people fat, pencils don't misspell words. Shout out to Stewie Griffin. It's not about the tool. A hammer can build something and a hammer can crack somebody over the head. You gonna blame the hammer? Credit cards are a tool. It's all about the user. It is all about the user. Credit cards are a tool. You can either be a tool to put yourself in a financial casket, or you can be a tool to put yourself into financial freedom. It is your choice. Credit cards are the greatest single financial tool available at mass, period. They are the greatest single financial tool. And if you're not using credit cards at scale right now, you're missing the boat. You're missing the boat. You should be using credit cards at scale if you're serious about building wealth in this system. I just laid out the bullet points. Go catch the replay if you need to go back and take notes on this video. Those of you who tuned into this live stream live, shout out to y'all, because y'all got this information straight up and raw. You catch the replay. Shout out to you for having an attention span to see a live stream that's going to probably end up being 50 plus minutes and tuning in this far in to get the value that was towards the end of this video. There's real value in this. Credit cards are phenomenal tools. They open the door to exceptional relationships and access to human capital and human resources and financial capital, financial resources. Credit cards are the only single tool that allow you to do that at scale. You can accomplish almost everything financially at the baseline with financial tools like a credit card, and scaling up strategically from that point. Comment down below with any questions, feedback, thoughts. I'm not going to keep this too much longer for the sake of the replay. For those of you who are going to catch the replay, I don't want to make this a junky ending. So everybody that's on live, I want to give an opportunity for any questions. If anybody want to shout out anything, you know what I'm saying? Anything like that. But other than that, I want y'all to get in the description down below, tie in with me on Instagram, slowly but surely putting out content on Instagram and building up the community there for my committee of pioneers. Get in the description down below. There's a link for you to work with me one-to-one. If you want to find out how to get maybe a one-on-one consultation to find out ways to work with me beyond what's in the link, or maybe if it's a cost issue for you, get in the description section, or excuse me, get in the comment section and comment. I'll reach out to you. We can make a connection and see if we can't get something going. I'm more than happy to work with individuals. I do it day in and day out. I'm a banker by trade by day. I help usually upper single digits to double digits in individuals and small businesses on a daily basis. So it's not just about me creating content. I'm live in the field as a financial professional and a financial expert. I do speaking events in person, small seminars, workshops, etc. So you're not dealing with somebody who picked up a book or a guru who ran across another guru a year ago, and they went from driving a damn forklift, and all of a sudden now they can tell you the ins and out of business credit and consumer credit. Shout out to people who, come from that background and doing their thing. But I'm just letting you know you're dealing with somebody with well over 10 years of real world financial professional experience in finance, in banking, in lending. So if you want to work with somebody who can help you curate a plan for yourself and actually help you structure all of these complex ideas and switch your mindset some, and you're serious about it, tie in with me. Get in the description section and jump into that link, or at least comment on the video, and I'll be open to connecting with you one-to-one and finding out how we can work together. But other than that, I don't see anything extra. My guy, P&R LLC, you already know how we getting down on this side. So all my guys, Wayne, if you're still in the building, everybody, all of my pioneers, my regulars, I appreciate every single one of y'all, because literally, if it's only a couple of y'all make it worth it, because y'all staying tied in over this long duration of time. I know I've been doing these live streams off and on for a year plus, year and a half. The channel's going on 3 years old, crazy. At the end of this year in December. So all of my pioneers that caught on to me, man, I appreciate y'all. Again, if y'all got any questions, any thoughts, any feedback, anything you're working on in your banking relationships, your lending, get into real estate, get into business. Y'all hear me talking about this. I'm here to help y'all. Get in the description down below, comment. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.